Good morning, traders. I am Dan Hodgman, and this is the weekly preview sitting down with Mark Meadows.
What's up, Dan?
Not a whole lot. June 17th. What's going on this week that we are going to sit down and talk about today?
I think we have a pretty substantial Fed meeting with the announcement coming out on Wednesday. So if you don't know about it, what are you doing wrong? You've been living under a rock or in a cave.
You haven't watched any of the recaps with Hogue and I?
Yeah. But really big, important meeting. There are some pretty firm expectations out there, which we'll touch on a little bit. And, you know, the market is really expecting a complete shift in policy stance from a Fed that hiked interest rates, I think, last in December, to one that is going to cut interest rates either this week or next month.
Good point. I think let's kind of scroll back a little bit in time and just review what has happened with the Fed.
Yeah.
Janet Yellen came in, or when Janet Yellen was on her way out, she was very, very conservative in the idea of changing rates. She wasn't really excited about it. She's been a promoter of kind of holding things steady. Let markets stabilize, let everything else stabilize slightly.
I'm not even going to go there right now. I was going to say, what do you have to let markets stabilize if they've tripled in 10 years?
Right.
But,
that was her. That was kind of the mentality she took. Jerome Powell came in, and he was much more aggressive with adjusting rates. As an options trader who trades off volatility in the treasuries, we were really excited about this idea of rate hikes. But now all of a sudden, it seemed like they came out a little strong. Everyone was just kind of prepared. Oh, here comes another rate. Here comes something else. Yeah. And the rhetoric started to change. Instead of him saying, we're going to be aggressive with rate hikes, it turned into, we're just going to make a judgment call during that time. Then it becomes, we're going to make in December, we're going to make a hike now, but we're going to be dovish going forward, and now they're going to slow things down. And now there's been, over the last few weeks, a lot of pressure for them to cut rates. Now we all know rates don't just factor in instantaneously. They take months. They can take up to 6-8 months, even to a year, for these rate changes to take full effect. We've all seen the sell-off that took place a couple weeks ago in equities. Since then, we've had a nice strong upside move. But when that sell-off took place, and the conversation around trade with China, there has been the pressure on the Fed to now cut rates.
Yeah, well, it's one of those things, and we talked about this back in December and January, sort of as the equity markets were collapsing, and we had that 20% down move sometime late December, early January.
December 24th.
And, I said, look, if you look at it globally, global economies are slowing. The U.S. is doing really well, but how long will that last? How long before Germany enters a recession? The ECB is in no hurry to raise interest rates.
They came out a couple weeks ago and said they're not even going to think about it until the second half of 2020.
Japan is now negative interest rates. It seems like there's a lot going on globally, and yet the Fed came out and raised interest rates because here in the United States, things were going pretty well. And we talked about some of the ramifications for that and how that actually may send the global economy going further sort of into the hole. One of the points being emerging market economies get debt that is denominated in US dollars. And if that debt then gets denominated in dollars, the dollar strengthens. That makes it harder for them to repay those debts and sort of puts the entire global economy in like this dollar shortage, and that's what we've seen. So that's kind of some of the background on the macro perspective.
That's a great point to make, Mark. And just to even simplify it even more, we've all gone traveling, and as you're planning to go out of the country, you start looking at those currency rates. How much is my US dollar, or how much is my euro or British pound, or whatever your currency is? How much is it going to cost me to transfer that into the currency of the country I'm traveling to?
Right.
So if you think about it, when some of these emerging markets, their debt is based in US dollars. If that US dollar is going up, their debt is increasing tenfold. And that's where this conversation of how much can we allow the dollar to go up, how will it affect those other countries?
Right. And then those are the economies that are expanding the most in terms of percent, right? Because they're really small economies, but they're driving a lot of the, imports, sort of become a big thing. And so they're driving a lot of demand for export economies and for, Western economies as they grow. And so that puts Western economies. So it's like this series of dominoes that, started to be initiated. And while there aren't good reasons, I think, if you look at the sheer economic data from the United States on why the Fed would lower interest rates, there are these reasons internationally. And I think the Fed is kind of feeling this pressure and wants to get ahead of the curve and make things a little easier for folks out there.
Absolutely. Now looking ahead at this week and how to prepare for Wednesday.
Yeah.
Those of you that watch regularly know where I stand on this point, but if you don't watch this regularly, I'm not thinking that they are going to change rates on Wednesday. That's my own opinion. Use it for whatever it's worth, but that's something I truly believe.
So I guess, go ahead. Like, before you sort of formulate your own opinion, what you have to do is take a look at the market opinion. Right? So you have to look at what the market is expecting. And you can do this by reading Bloomberg or any other news sites. They quote economists, they quote probabilities and Fed funds rate and stuff like that. And from that, you have to figure out what's already priced into the market so that then you can know, hey, well, if the Fed does X instead of Y, what's my theory on what would happen?
Right, and that's something I've talked about a lot lately, is here's what the markets are doing. And lately, we've seen the markets making really nice moves. We have good volume. And the one thing that I always go back to is these markets have a short memory span. So 3 weeks ago, we had that big down move, and everyone was screaming for a rate cut. Since then, the markets have moved in an upward direction. Mark talks about Fed funds, and I'm sure he's going to dive into those a little bit more. But we know where those are trading and what's going on with those. It's leading that right now it's looking a little quiet, and I do believe we see it in the markets currently. People are extremely cautious going into Wednesday. We saw it last week. The markets were pretty quiet. They sat sideways. They're continuing to just kind of work that way, waiting for the news.
And what you see is, it would be a pretty abrupt shift in policy for the Fed to cut interest rates at Wednesday's meeting. But if the real question that you approach this as a trader is not will they or won't they cut interest rates. I can't say, hey, if they don't cut interest rates, I'm selling equities, because maybe they say, hey, they shift from this stance of and I think the word they use is patient, this stance of patient to, hey, we're likely to move in the next month. You see, along with the interest rate decision though comes the economic data projections. So if you see those economic data projections that the Fed puts out every 3 months shift lower to lower GDP growth, lower inflation, those provide some indications and context as well as to say, hey, they definitely are going to go in July, or maybe they won't go in July. We need another month of data to look at it. So it's not just, as a trader, you can't just approach this as a will they, won't they decision.
It's the terminology used.
What's the whole landscape?
Right. So if we look back to the last time Jerome Powell came out and spoke, and he said he's not considering anything right now. He's going to sit back and be, like Mark said, patient. 1 year ago, the words that they were using was aggressive. Then it turned to, we're going to make a judgment call. Then it turned, we're going to be dovish. Then it turns to, we're going to be patient. It's finding the words and the terminology used in their decision-making process that's going to truly affect these markets over time. And so Wednesday, pay attention to what they say. What's that key word in their next decision, and where they're looking at in the future, and that's how we start to incorporate these changes
Yeah.
into the market.
And the key to this will be, so the decision's at 1 o'clock, but Jerome Powell has a press conference, I think at 1:30, it may be at 1:20 or 1:15. Double check the time on that, but I think it's at 1:30. So it's not just going to be, you'll get that little volatility around the statement, and if there is a big change in the statement, if they eliminate the word patient or the economic projections look off, then you may see a larger move. But you also want to be out of this market, in my opinion, during the entire press conference that Powell has, because he could add context, he could take away context. There's a lot that could happen between 1 o'clock and say 2:15 that could really hurt your trading P&L. So as a day trader, I'm going to be out of the market during those times, and then see what trends. This is a monumental shift about to happen. See what trend it starts that I then can jump on for not the next 1 hour, but
Right.
the next 1 week or 2 week.
You were looking, I think, even possibly a month-long opportunity
Yeah.
with this. So day trading, if a lot of people are trading the crude. Every single Wednesday at 9:30 Central Time, crude comes out with their inventories, and it leads to an emotional reaction, and it's a nice trade for the next maybe day and a half, and then things kind of shift and adjust, and then we keep moving forward because we're going to hear this, we're going to get a new number come next Wednesday. This is a number that if they don't change, we're not going to, that means the numbers themselves hasn't changed, but the future plan can change. And that's the biggest thing. So we're going to sit here and think, okay, they are now saying they're going to consider a rate cut for July. What does that mean? Well, that means there's going to be opportunity for the next possible month, even longer, leading up to that decision. And so those are the things we need to be thinking about. And that big picture, when we sit down each and every day and we're looking at our daily charts and we're looking, where can this thing go today? Those are some of the factors we need to be thinking about.
Yeah.
So,
And it may not even be, if you look at it, and you talked a little bit about the Fed funds rate, which is just, you can convert those into probabilities that the Fed will lower interest rates, keep interest rates the same, or increase interest rates over the next whatever time period that futures contract trades at. Expectations, at least over the weekend, they've, I'm sure, changed today, but I haven't seen them, are actually a 20% chance that the Fed lowers interest rates here on Wednesday.
but it's 80 in July, correct?
It's an 80% chance that they lower interest rates by July.
Okay.
So there's a scenario out there where the Fed says, hey, yeah, our next move likely is lower, but it's probably not coming soon, that you have a dramatic repricing of those, which will then lead to a dramatic repricing of the dollar, probably an equity market sell-off, right? If they
Treasuries.
push it out to September or October and say, hey, the data's just not there yet, we can't justify it, then
Emotional reaction will
you could see those
definitely
big
lead
moves.
to a longer term trend.
So I think, and this is what I would close on, you may have one last piece of advice, but what I would say is trading plan up until Wednesday is to figure out what the market expectations are. Figure out the scenarios that those economists, those traders are really talking about as most probable, least probable, already priced in, and then work that into your Wednesday plan of, okay, if the market, if the Fed does X, I think it could have Y or Z implications. During that 1 hour window where it's the Fed, just let the market do its thing, and then jump in and say, okay, here's how I want to trade this last hour of the day, or you know what, I'm just going to wait till tomorrow, see how this all prices out, and go from there. But use that as the baseline of your weekly
Some great
trading
points
plan.
to walk away and take
Yeah.
and utilize here today. I will leave you with this. Our job is to be a day trader. Our job is to take a piece of the move. Our job is not to determine where this market's going to be
Yeah.
next week or the week after. Our job is to sit down frame out what opportunity lies today. Forget about our bias over time. If we want to see equities make new highs, and that's what we believe is going to happen, don't let that influence your decision today. That is not how we do this as day traders. We get the opportunity each and every single day to sit down and restructure our own frame of mind. So when you sit down, if you sit down with John every single morning at 8:15 on the market forecast, he helps you break it down to look for today's opportunity. Yes, we're going to look at a daily chart. We're going to see where long-term opportunity is. But ultimately, it's finding out where today can go and how do I take advantage of that. Remember, that's our job as a day trader. It is not to determine where markets will be in a week, in a month, or next year. If you're doing long-term investments, then that's what you have to think about. But as day traders, which is what we're talking about every day here, that's our job. Find the opportunity today.
Cool. That's all we got.
Sweet.
It's good to see you.
It's good to see you. Thanks everybody for tuning in. As always, questions, comments, feedback. Let us know what you're thinking, and I'll see you this afternoon at 2 p.m. for the market recap with our very own John Hoagland. Trade well, everybody.